Well, folks, this is getting bad. I am going to take you through everything that's transpired here over the last few hours in relation to this SVB bank situation. I've got to show you some crazy stuff in this video, including a gauntlet, and I mean a gauntlet of companies that had substantial amounts of money tied up with this SVB bank and now can't even get to that money now at this point in time. It's way deeper than we thought, and believe me, there's going to be a lot more fallout over this next few weeks in regards to this whole situation. We're still just at the tip of the iceberg in relation to this. This is one of the biggest things to happen in the financial system, in my opinion, since 08, 09. Absolute craziness, okay? Thanks for being subscribed here, folks. I hope you enjoy this video. Even on the weekend, I appreciate you all joining me, okay? And the best way I could put this whole situation is, you know, imagine you live in Tornado Alley or something, right? And one night, you know, a tornado's coming, you go down to your shelter, and you know, you don't really know the damage that happens that particular night, but when you wake up in the morning, you go out to see the devastation. You're lucky enough you find that your house was okay, but then you find out like, oh my gosh, like a ton of my neighbors' homes just got absolutely decimated, right? This is absolutely an awful thing to see. And that's this SVB bank situation. The devastation is starting to be found out. There was the initial shock when the tornado hit, right? But now you get to kind of come outside and get to see, oh my gosh, it's bad out here, okay? First one up here, Roku has $487 million of cash and cash equivalents in uninsured deposits at the failed Silicon Valley Bank, a streaming media company said in a filing with the SEC, okay? That's about 26% of Roku's cash. And once again, this is just the tip of the iceberg in relation to how many different businesses and companies had money with this SVB bank that they can't even get to. And we'll you know, I'm going to show you some of these in this video. It's insane, okay? And, you know, $487 million, you know, hopefully Roku gets that money back. But one, we don't know when that money can come back. And the most important factor, okay, when I say we don't know when they could get that money back, the most important factor is we, as of right now, don't know if they're going to get that money back, okay? That's the bottom line risk. They're supposed to sell off a ton of assets the company had. But what are those securities, those assets worth right now, okay? And never mind, let's say the market goes down big. Let's say they owned a bunch of stocks or bonds or whatever it is, right? What are those really worth? What if they had a bunch of investments in private companies and they have to sell those to investors? Are those investors willing to pay top dollar right now in this market with everything going on with bank failures and bank runs? I don't know about that, right? And so that's a scary part of this is like, is Roku going to get all 487 million back? Or are they going to get like 100 million back or 200 million back or 50 million or nothing, right? That's what, and also when does that happen? That's the other big factor is like, when the heck does this happen, right? At this time, the company does not know to what extent the company will be able to recover its cash on deposit at SVB. Nonetheless, Roku said it believed it would be able to meet capital obligations for the next 12 months and beyond with its unaffected $1.4 billion in cash reserves at other large financial institutions. Yeah, well, the problem was SVB Bank was a large financial institution, and look how that worked out, right? So hope for the best in regards to that whole situation, right? This gets way crazier, okay? This is going to get crazier and crazier. Circle's USDC stablecoin breaks peg with $3.3 billion stuck at Silicon Valley Bank. $3.3 billion? This is insane, okay? I was actually watching this play out last night, like right before I went to bed. It was a crazy situation because basically USDC went all the way down to like 88 cents, 87, 88 cents. It was insane to see that, right? And it has come back quite a bit here, okay? It's not quite back to what it should be. But to explain this to folks that maybe don't really track these stable coins, this should never, ever happen, okay? This should, if the most it should maybe go down is like 99 cents. It should never move very far away from $1. That's not, you know, that's the way these are designed, is basically to always be around $1. And the fact that when this, how popular USDC is, the fact that this baby went all the way down to 88 cents is shocking. I think one of the reasons it recovered, in my personal opinion, is definitely, there's a lot of people looking at it from like an arbitrage play. And I even saw some people talking on some forums last night. I even considered it. I didn't do it because I was like, I'm not even worth, you know, trying to get into that crap, right? But I even thought about it because I was watching it when it was like 88, 89 cents. And if this does repeg back to $1, that's an easy, let's call it 10%, if not more than 10% return in a matter of a few days here. And so that's pretty nice, right? But we'll see what happens with that. But I can tell you it's a messy situation. And obviously with everything we've seen transpire in crypto, it's scary. It's scary to do any of that, right? This person says this is pretty interesting. USDC, if this repegs, it's going to be the first repeg in the history of crypto. That's insane, man. That's insane to think. And I'll tell you, it's looking actually pretty decent right now. Back up to almost 97 cents. It's looking decent, right? All right. Here, David Friedberg and David Sachs on the gravity of the SVB collapse. This is basically a Lehman-sized event for Silicon Valley. Unless the Fed steps in here over the weekend, we're going to see potentially a run on the regional banking system, a cascade like we saw in 2008. So they're very, very worried about this. Obviously, Wall Street's concerned about this as well. You guys saw the regional banks, how much those have sold off. It's insane, right? And so we'll see what happens here. There's definitely some potential fallout here. Is the Fed going to step in? I don't know if the Fed really wants to step in right now, okay? I'll be completely honest. And I think they're going to look at this situation as it's not, there's too big to fail, right? Which is like the JP Morgans and the Wells Fargos and the Bank of America. This, I don't think they're going to quite look at it like this. And so I don't know how much the Fed's really going to step in. Obviously, FDIC has stepped in and they're doing their job, but I don't know how much else is going to really happen here in regards to this whole situation. And maybe we do see a cascade. Maybe that's what the Fed wants. Did anybody ever think about that? Maybe the Fed wants that a little bit. Maybe, I don't know, maybe they want that a little bit. Say, hey, you guys won't stop spending money? You want to keep unemployment all low? Okay, I'll wreck your banking system. Have fun with that, okay? And then good luck spending any money. I'll just take all your money, okay? Paul says, if you wake up this morning believing it's vital for the federal government to make uninsured depositors whole, but forgiving student loans is unfair to those who played by the rules, it's time to take a long, hard look at yourself, okay? Fair play, okay? Preach on that one, right? This person says, I'm very sympathetic to the idea that SVB collapse will harm many workers if not handled properly. However, proper handling should not bail out the risk takers. VCs and founders should not recover assets as part of this transition. The employees should be prioritized, right? And okay, I understand their point there. It's always, trying to help out the little guy, right? But at the same time, and I think this is good for everybody watching this video to understand this, right? Is you've got to consider where you're working and how risky is your job, right? And I'll give it to you like this, right? When I got my job at, let's say, Quick Trip, right? And I moved from Walgreens to Quick Trip, I was never scared about my job because at the end of the day, we sold gas and we sold cigs and we sold, soft drinks and like stuff that like people need and they're going to keep coming there, right? And so I always knew my job was like secure as long as I do a good job, right? And if I do a great job, I'll get promoted. But my job's like almost guaranteed because like everybody needs that stuff. When you work at a startup, nothing's guaranteed in this, man. Nothing's guaranteed in this. And so you've got to just view it that way. Yeah, is there potentially a great opportunity as a startup if you get in early, right? And you're one of the top dogs at that startup and they become the next big thing. Oh my gosh, that could change your life, right? But you got to understand you are taking a risk as well as an employee of working somewhere there versus working somewhere where your job's super stable and it's like a guaranteed situation, right? Because it's a needs-based whatever, right? And so I just think we've all got to consider these things, right? Even as a worker at one of these companies, you got to consider the risk, and it's not just about what I can get in this situation, right? This could be fine, it might, but there's also a very good chance it's not. SVB collapse, 50% of the 2008 bank failures alone. This is shocking. I mean, if you go all the way back to 2010 and you basically tack on every single bank failure since 2010, it doesn't even equal this Silicon Valley Bank. It's an absolute, this chart I thought was very telling, and I thought it was important to show you guys like just how insane of a collapse this was out of nowhere for such a big institution like this, right? Oh boy, okay. Oh boy, this gets good. Economic update. SVB Bank marks the second largest bank failure in U.S. history. 2, total U.S. credit card debt soars, set to cross $1 trillion with interest rates at a record 25%. 3, interest rates are rising at the fastest pace in history. 4, mortgage demand at a 30-year low. Oh boy, okay. Oh, that's a little rough. Okay. Etsy. It gets way deeper, okay. Etsy warns sellers of delay in processing payments due to Silicon Valley Bank collapse. What? Holy smokers. I mean, what? It goes to show you like how deep all this stuff goes, right? One affected Etsy seller told NBC News that deposit delay would have a catastrophic effect on his business. That's why I say, when I told you guys there's going to be so much fallout from this over the next few weeks, there's going to be a lot of fallout. When you're talking about a bank that had $200 billion plus of supposed assets, I'm just telling you, like, it's going to be deep. It's going to be deep in regards to this situation, right? Vox Media, the publisher of New York Magazine, The Verge, Group 9 Media, reportedly had a substantial amount of funds held in SVB. A person close with the matter told the New York Times. The company's credit cards, which SVB issues, also reportedly stopped working. Vox has reportedly said the company won't face any disruption, which includes its payrolls. Penske Media, which recently placed a reported $100 million investment in Vox, says it's ready if the company's required any additional capital, but it didn't foresee any issues in regards to that, right? Even credit cards stopped working. I mean, my gosh, what a complete mess here. Roblox. Online game platform Roblox held 5% of its $3 billion with SVB, the company said in a filing, which means roughly $150 million was held with the bank. The video company said SVB's collapse will have no impact on usual operations. That's good, but still, $150 million. Once again, when do they get that $150 million back? Do they get that $150 million back? Do they get a portion of it? Do they get none of it? That's what remains to be seen in this whole situation, right? Camp, a startup selling themed experiences, toys for children, sounded the alarm on social media pages and the website after the SVB crash. The company currently has a sale related to SVB's collapse, since it had most of the company's cash assets held with the bank. Oh my gosh, man. I will say, good on whoever the person that runs this company is in terms of like taking a very negative situation into a positive, right? They had most of the company's cash held at this SVB bank, right? But they're turning into a good thing, right? They're doing a big sale, and outpouring of customer support will hopefully see us through. So that's good. That's life for you, man. And that's business. Like, some things are just going to not go your way, right? It's going to go bad, and you're like, what the crap, man? And you got to find a way to make it through and make a positive out of the whole experience, and it seems like they're doing that. So good on them, man. That's true entrepreneurship right there. Slumberkins, a company that makes toys and educational material for children, shared a statement on Instagram and said that it had turned upside down after the SVB collapse. The business, which also worked on to produce series on Apple TV Plus. Does anybody watch Apple TV Plus? Like, I haven't heard good things, and I don't really watch TV, so I can't comment. Said, quote, a majority of the company's cash was held with SVB. I mean, just devastating. I mean, the amount of companies that either had a huge portion of their cash or almost all their cash with this particular bank is a big number, man. It's a huge number. Rocket Lab USA, aerospace manufacturer Rocket Lab USA, held a good amount of its cash with SVB. The space company held $38 million, or about 8% of its total cash with SVB Bank. Oh my gosh, the Silicon Valley Bank. Did they have everybody's money? Holy smokers, this ain't no jokers. Ambarella, I remember Ambarella back from when I used to own Go Broke stock back in the day, and essentially Ambarella was their main chip supplier for their cameras back in those days. Ambarella, a semiconductor company that focuses on AI camera products, took a hit from the SVB crash. The firm held deposits of approximately $17 million in total value, which was around 8% of the total $206 million reported at the end of January. It goes to show you actually how many companies hold different cash different places, and that's I guess you can say prudent action on their parts, right? That they didn't have everything tied up there, right? On Chorus, biotech company. So from my understanding, biotech companies are going to get hit left and right in regards to the situation. Like, that's what I'm hearing, okay? Biotech company on Chorus faces the loss of some of its funds as a result of the SVB crash. The company held about 23% of its total cash and cash equivalents, short-term investments in the bank, which is a total about $10 million. With the way these biotech companies burn money, I mean, if you also lose 23% of your money, I'm just telling you, like, you could be under in a rather rapid amount of time here, right? Another biotech company Sangamo Therapeutics had approximately $34.4 million in deposits at SVB. Fast Company reports the pharmaceutical company also offers technologies in gene therapy, cell therapy, and more. Wow. Eager Biopharmaceuticals, yet another pharmaceutical firm, Eager Biopharmaceuticals, faces issues after SVB crash. Fast Company reports Eager reported a cash deposits of around $8.3 million with the bank, around 7% of its total cash and cash equivalents. Okay, now, and there's one last part I got to share with you guys before we wrap up this video. It goes to show you just like how wide-ranging, how many companies had substantial amounts of money with this SVB, the Silicon Valley Bank. And like I said, when do they see the money? Do they see the money? How much of the money do they see? This all remains to be seen. And I don't be surprised if over this upcoming week, you hear about a lot more companies that had either a portion of their cash or maybe had other investments with SVB as well, right? Don't be surprised if think about all the prominent people in maybe the venture capital space that had substantial amounts of money with SVB Bank, right? Silicon Valley Bank. Those folks can't, if they have, let's say they had $100 million net worth and they had $20 million tied up, maybe in the wealth management side or just the banking side of SVB or whatever, right? Well, those folks don't have that 20 million now, so they can't go buy whatever with that money, right? They can't go buy real estate or stocks, even if there's a deal, or invest that into the next company. And honestly, after a situation like that happens, people are going to be very scared, and they're not going to want to go spend that sort of money right now, right? So this is almost has a recessionary type effect on everybody that's kind of seeing this play out, and a lot of people get very, very worried, right? And I can tell you, for this bank run situation, everybody's seeing this and kind of how it's played out here, even in the United States of America, right? Imagine what people are thinking that are maybe watching this play out and maybe live in other places in the world, right? And imagine the potential bank runs that could happen over the next few months in other places that aren't as developed as the United States of America. Because I'm telling you, if people look at this and they're like, oh my gosh, that happened, a bank run happened in the United States of America? Why can't that happen in my country? It freaks people out. And all it takes is, especially in this day and age where everybody's connected, social media, all it takes is a little bit of this, that, and next thing you know, people start freaking out. They're like, I got to go pull my money out. I got to go pull my money out, right? And not everybody has an FDIC. That's all I'm going to say about that. Not everybody has an FDIC or has a government that's just ready to back whatever deposits are there. So I think this is more traumatizing, actually, for other countries that are seeing all this play out that maybe aren't as developed as the United States of America, okay? This one. In 2018, President Trump signed a bill that rolled back Dodd-Frank regulations on banks like Silicon Valley Bank. Prior to the bill, the threshold for which banks were required to submit resolution plans for their rapid and orderly resolution to the FDIC was set at $50 billion and higher. This was to ensure the failure would not have serious adverse effects on the financial stability of the United States. Trump and congressional Republicans raised this threshold to $250 billion. Silicon Valley Bank appears to have $175 billion to $210 billion in consolidated assets, meaning they likely excluded from some of the Dodd-Frank regulations. It seems likely this could have been avoided if it weren't for the rollbacks by the Trump administration, okay? Now, I'll say this, okay, about this whole situation, right? Because it even gets into politics and obviously things that were done there, okay? And as somebody that's not a Republican or a Democrat, I see the good and I see the bad with both parties, okay? And with the Republican side and with the Trump side and kind of what Trump was doing there, I think a lot of his rollbacks on different regulations, I think a lot of it was good. I'll be completely honest. The one thing you don't roll back on, and for all my Republican friends watching this right now, make sure you get this through your politicians' ears forever, okay? Never, ever give the banks an inch, okay? That's not the industry you ever touch in relation to like hoping like, let's roll back some regulations here. Not in the banking system. These folks have proven time and time and time again they can't be trusted, okay? There's a lot of industries you can roll back some regulations on, and there's a lot of regulations that get pushed way too much and way too far on many industries, and it hurts growth, right? But I'm telling you, with the banks, you don't roll back any regulations on those, and you watch them like a hawk. It's way better to over-regulate them than under-regulate the banks, because I'm telling you, those are like letting a serial killer out of prison, okay, who's like killed like 20 people, okay? You don't do that. And I'm telling you, don't do that. And so all my Republicans that are watching this video right now, make sure politicians understand, don't ever touch, it's fine for a lot of other industries, but don't ever touch the banks in relation to loosening up. Let's loosen up the strings in the banks. No, never do that, okay? I'm just telling you, it always ends badly. It's just a question of how many years down the road is it going to end badly. They've proven it time and time again. They can't control themselves. They can't police themselves. And when that happens, you just can't give them an inch. You give them an inch, they're going to take a mile. Believe that, and it will cause huge problems. And that's exactly what we see playing out in this situation, okay? Hope everybody enjoyed today's video. As always, I appreciate every single person that subscribed to the channel. If you're looking to apply to join my private stock group, the private wealth group, that will be linked in the description. If you're looking to join us in my Patreon and see all the moves I'm making in the market right now, join us down there. That will be pinned comment, and it'll be in the description area as well. Thanks for watching even on the weekend, and have a great day.